Hi, this is Zak Mir from Master Investor with a look at some bulletin board hero stocks on Thursday, the 12th of March. Starting off with Alba Mineral Resources, where we've got this basing which has been in place since November. That's starting to perk up now. We've got this typical RSI V-shaped rebound here above the 50 level, which should be an intermediate buy signal. We had one of these in February, and although that didn't quite get off the ground, the shares have actually held reasonably well since then. So this second signal should kick in. Initial target, the 200-day moving average at 0.54 pence, shown there in black. And then after that, following 1 to 2 months after that, we could retest the 1.2 pence resistance of the autumn. This stage really only back below this initial March bear trap low around 0.21, 0.22 pence would really be enough to kill the prospects of an intermediate recovery. Following on from this, we've got Northcote. Still a bit of a fiddly situation. Volumes have been rising. It looks like an exhaustion gap reversal. The gap previously to the downside, top of that in February, let's say 0.12 pence, and we're sort of holding around that area now. So the old that old resistance becoming support now. Likelihood is that as little as an end of day close above the 50-day moving average at 0.14 pence should be enough to turn this stock around and allow it to revisit 0.25 to 0.3 pence resistance from December over the following 4 to 6 weeks. Otherwise, if you're an aggressive trader, you'd be going long now with a stop loss obviously just below the 0.1 level. So Northcote bubbling up, but still a little bit of a way to go in terms of being an outright bullish situation. Probably could say the same about Quindell as well. Yesterday's price action very encouraging. We closed on the 100 pence level. What's probably the most encouraging part of this, apart from the way that this looks like an inverted head and shoulders formation from November, but the left shoulder and then this right shoulder here, is the way that we've held the gap down to 77 pence, which was made from February, and also the way that the 50 and the 20-day moving averages are sort of rising together. That is a plus point, as is the way that you can draw an extended rising RSI support line here from November as well. So we just had another double rebound off that for March, and we're holding above the 50 as well, the 50 level, the neutral level on the RSI front. So from a technical basis, this does look like a recovery situation. Obviously, there are sort of binary events in the offing which might change that, but this rising trend channel looks credible, and at least while we hold above the 50-day moving average, the chances of further progress seem to be quite high. If you're cautious on the stock, you'd wait for a break of yesterday's 106 peak, which is also the top of this October resistance line as well. So that's for the cautious. But at the moment, above that gap, the technical glass is half full rather than half empty. Going on to another stock which is very much in focus at the moment, Sefton Resources. We've seen a sort of rather nasty bull trap retreat from above the 200-day moving average. That's the black line at 0.12 pence, which is just about the last thing you normally want to see. But there is the possibility that we've got an uptrend line here from December, and we're finding support there, and we could then head back towards the 0.2 pence zone if that holds over the next few sessions. If you're cautious on the shares, maybe wait for an end of day close above the 20-day moving average 0.08 pence, or even the 50-day just above that, before taking the plunge on the long side, and also have the RSI back above the 50 level. It's currently 44, so those might be triggers to wait for if you are still cautious on the stock. Finishing off with TriStar, and here it looks as though we've got sort of another attempt at recovery, similar to Sefton in the sense we've got this bull trap. We had the bull trap through the 200-day moving average. That's the black line, 0.14 pence. Possibility now is that we're in the aftermath of the final February breakdown that there was towards 0.05 pence, and the shares will be able to head up towards the top of this channel that I've just drawn over the next few weeks. The big trigger here really would be to break back above the 200-day moving average 0.14 pence, and that's why it's a stock to watch or a situation to watch. You already have the RSI above 50, which is encouraging, which tips the momentum to the upside. And we also have the 20 and the 50-day moving averages rising as well. So one to watch out there in the form of TriStar as a potential retest of the February resistance. That's it from me. More updates at masterinvestor.co.uk.